BTC hitting all-time highs, normie friends pestering you about random coins, and Coinbase entering the top 100 downloaded apps has got many of us wondering when the markets will top out, experience a pullback, or enter a full-blown correction. The issue of when to sell and realize profits is a contentious topic in every cycle and has certainly yielded some worthy memes. But this time around, things seem to be a bit different, and Coinbase downloads may no longer be the holy grail of top signals. So, the next time you see headlines like this one, it might be too late. That's why today we're exploring the top 11 top signals to be aware of to avoid getting wrecked. Please note that this is not an exhaustive list of top signals, nor are any of these top signals by themselves enough reason to sell everything. Prices are subject to change in the blink of an eye, so please always do your own research. Alright, we simply have to kick things off on a tongue-in-cheek note here, and there can be none other than the man, the myth, the legend, Jim Cramer himself. If you're familiar with the Cramer curse, you'll need no further explanation. But legend has it that if Jim Cramer says buy, you should sell. Top signal number 1 that you might want to look out for is mainstream media coverage and a subsequent rise in Google searches for Bitcoin and crypto-related terms. We know from past cycles that positive mainstream media coverage can impact sentiment and retail decisions. So, once your morning news anchors start the day with some Bitcoin price action coverage, even at all-time highs, it might be time to check the search engine results for Bitcoin-related terms. But it goes without saying that mainstream coverage has made mistakes in the past, so it's important to not rely on this top signal alone. The second top signal on today's list is, of course, the swathes of celebrity endorsements and cameos that we saw at the peak of the last cycle. So far, we haven't seen much of it this year, but think back to celebs like Matt Damon and Larry David doing Super Bowl ads, Tom Brady with laser eyes, Kim Kardashian being sued and fined for shilling tokens, sports people like Neymar, and even rappers like Eminem becoming NFT headlines, and even micro-celebrities becoming influencers. When all of this comes back, it might be time to run. Next up, we have dubious celebrity NFT projects like that of Logan Paul's. Clearly, these people have little to no desire to stay and build in the space throughout the bear market, so if controversial figures are announcing their own projects, maybe it's time to consider what their motives are, what value or utility their projects have, and to whom they're shilling what. Number 4 is the App Store. Now, the space has definitely evolved through the bear market, and there are plenty more crypto exchanges and apps than just Coinbase on the App Store. It's fairly unreasonable to think that every normie would have deleted the app, so this time around we should pay attention to the App Store rankings more generally as an added indicator of a potential market top. 5 is normies. If your normie friends are breaking even, bringing up Bitcoin, taxi drivers and hairdressers are asking you about the price of Bitcoin, your boomer colleagues, parents and grandparents are now asking you to invest their money, it might be time to consider where your exit liquidity will come from. Alright, let's get into some of the more technical top signals and reasons why people might sell their crypto. Market cycles don't exactly match up one-to-one, but they certainly rhyme and patterns can be found when comparing bull markets. So our first indicator is the long-term moving averages breaking and becoming a resistance band rather than a support band. A trend reversal and lower lows can be expected after this. The second indicator is BTC dominance, which is a measure of BTC market cap as a share of the entire crypto market. When this figure is above 60%, you can expect people to slowly sell their BTC and rotate into alts, while below 40% is considered a BTC accumulation zone. We can expect a sharp decline in BTC dominance to signal a larger rotation into alts, signaling alt season. Another technical indicator is the MVRV, or market value to realized value ratio. It's useful for getting a sense of when the exchange price is below fair value. Now that Bitcoin has reclaimed its previous all-time high, the MVRV ratio is currently sitting at just over 2, meaning Bitcoin's market value is currently 2 times its realized value. In the last cycle, the MVRV ratio peaked at 7.6, while in prior cycles, it peaked out much higher. Now, it's a fairly reliable cycle awareness metric and definitely worth keeping an eye on. All right, another technical top signal to look out for is the spot trading volumes peaking across leading crypto exchanges. On-chain usage, daily active users, transaction volumes, and subsequently transaction fees are likely to increase with millions of new users or speculators entering the market. Eventually, these indicators will peak and become another top signal worth factoring in. The Fear and Greed Index can be a solid tool for grasping market sentiment, but it isn't sufficient by itself. By using the Fear and Greed Index alongside indicators like funding rates and open interest, we can paint a more accurate picture of the market. For instance, the Fear and Greed Index peaked at 79 last month, but BTC kept rising. As a reminder, exchanges use funding rates as a mechanism to keep perpetuals prices in line with spot prices. And as a third indicator, you might want to look at open interest, which represents the total number of open contracts on a security, meaning you can gauge the strength of the market by using volume in conjunction with open interest, funding rates, and the Fear and Greed Index for a more accurate top signal. And finally, we have gain porn. Not like gym gains, but rather non-crypto natives sharing their realized gains all over your feed. Think Wall Street bet style gains of thousands of %, moon and rocket emojis, wrapped McLarens and Lamborghinis, the whole shebang all over your feed all day, every day. When this sort of madness grips the space once again, it's likely time to start taking profits before you're left holding a fat bag of dust for the next 3 years. And on that note, please remember none of this is financial advice and is intended solely for informational and entertainment purposes. Always do your own research and don't rely on a single indicator or top signal. Don't forget to take profits and stay defiant.